So I'm very pleased to be here, and thank you for being the first speaker post lunch. So it broke the ice for me. So I touch upon a very interesting topic, and for most of us, it's a kind of a black box. The use of AI and ML in the banking and finance space. So I think over the last few decades, the banking and financial space has been an early adopter of technology, right from the days maybe 4 decades ago when we saw the rollout of ATMs, then we saw core banking, then we saw anytime banking. Now we have carry our banks in our respective pockets in our apps. So I think it has been an early adopter. But if you look back in time, that adoption of technology has been more or less linear. I mean, you had the legacy systems, the COBOL-based systems transforming into core banking and so on and so forth. But I think this new era is going to be a real leap forward. I think nothing has prepared us for moving from a very structured and rigid way of implementing technology into something which is totally unstructured. In fact, it's going to be a difficult journey for us. So many of us have adopted it in a very specific way. For example, you've all heard of robotics, RPA. I think that's the first step because it's an easy win. You just put it to work. It eliminates a lot of the mundane tasks. It brings some amount of productivity gains. It's an easy win. But the next step is probably using something like machine learning in terms of making sense of your structured data, drawing insights. So I'll just, without much further ado, just go into the agenda for today. I think for a finance professional, it's very important to look at use cases where you can use an emerging technology and what are the outcomes you can drive. In terms of benefits, I'll touch on that. There are some challenges, of course, and there are key enablers. So one of the most important area of value you can provide to your stakeholders is adding value to your customer. So how do you do that? Because today you have millions of customers literally, and giving a bespoke experience to each and every one of them is not something easily done. But if done, if you can understand the customer propensity to buy, if you know what kind of banking product he's likely to buy and offer it to him at the click, just when he's going to click on perhaps a home loan, if you can give him a structure that could appeal to him based on his cash flows, he's more likely to buy. And if you give him a tailored product, he's less probably going to haggle with you on price. So there's a huge win-win both for the customer and for the originating entity if they can give tailor-made customer experiences. So you already have many banks also offering some of this. I mean, no bank worth its salt doesn't have a chatbot today, doesn't have, HDFC Bank has EVA. Everyone has some kind of a thing, but it's still early days because I've tried those. It doesn't really give me any joy beyond the first few kind of interactions with it, but I think that's evolving. Another area, from a bank's perspective, what's in it for the bank? It amplifies your revenue because if you're able to give the customer what he needs, it can help you price better. It can price the right price to the customer in terms of the ability to buy and the ability to take your product. Also, it helps reduce your costs. It helps give you productivity gains. It helps reduce operational risk in the system. In fact, McKinsey has said in one of their reports that ML and AI could deliver up to 1 trillion of additional value across the spectrum for the financial services industry. AI ML also helps in, this is one sector which is very much exposed to all kinds of frauds and I mean, being the nature of the beast, detecting fraud, detecting money laundering, detecting, there's a lot of compliance overhead on banks. So if there's a money laundering done through a bank, it is the bank who's responsible for have done the KYC, identifying patterns of suspicious transactions and reporting those. But in view of millions of transactions that are done, it is not easy to detect unless you have algorithms working on that. So there are well-defined algorithms, and over time those algorithms will actually be beyond the rules. So earlier it was based on decision rules, now it will be based on embedded learning. So as the software keeps detecting frauds, it gets better at it. These are perhaps some of the benefits I touched on. One is from a customer experience standpoint. One is enhancing your overall security and compliance. And you also reduce operational cost and boost your revenue. So a lot of keyed in benefits across the spectrum. There are, of course, challenges, as I alluded to earlier. Many banks, in fact, are finding their existing core banking systems quite inflexible and rigid. And where it comes to the area where they want to collaborate with fintechs and introduce new products and revolutionize the way they deal, they are actually thinking of a mini core banking, which sits outside the main core banking and is more susceptible to linkages and collaboration with the wider finance ecosystem. So there's one challenge that could impact the way you implement AI. You would need to construct alternate platforms, perhaps have a data lake or data warehouse on which you embed AI. This is not something that can work in your main core banking. And how you feed back into your core systems the learnings and the data that comes from machine learning and AI could be a challenge for a bank to implement. In terms of key enablers, one is from an organization culture, education across the spectrum as to what could be possible use cases, and each vertical and each function coming up with areas where they believe AI and ML could be of use. As I mentioned earlier, I think the early adopters have been operational departments, which involve data input and data entry. They have adopted scanning, OCR, RPA as productivity enhancement techniques. It's about having the right tech talent. I think banks today are recruiting engineers to be part of the journey towards adoption of the latest cutting edge tech. And that's a trend that's likely to grow. It's about also communication of the requirements to the solution providers and adopting the right tools and the right technology stack. So that's about it. I know I'm well within my time, Shamil. So it's a brief presentation. I've made it more from the point of putting in place thoughts so that when we go away from here, we can think about how this subject area can be of use to us. By itself, it's a very vast area, and any presentation on this could take more than an hour. So I thought I'd keep it brief and keep it more as a thought-provoking session.
Thank you so much, Mr. D'Souza. Could we have a big round of applause?
Thank you.
Sir, there's a question for you. Sir, hold on. There's a question for you.
Thank you for a great presentation. So I have one question. So these days, a lot of fintech firms are coming and they are delivering like some of the specific banking services. So do you think like these fintechs are threat to the the main or traditional banks?
Now, what is your question?
So these fintech firms are threat to the big banks or traditional banks?
No, so are you saying will they replace banks?
Yeah.
No, I see basically when you talk about fintechs, you had fintechs who started lending activities. You click on a button and you get a loan in 10 minutes. I think those practices were prone to a bit of abuse, and many people complained that they didn't want a loan. It was disbursed to them. There were complaints. So largely the customer protection aspect of it was not being met. So I think what will happen going forward is that the way the regulations have shaped up, that fintechs need to be associated with the bank. So the bank will onboard the customer, the bank will take care of the KYC, the bank will ensure regulations are being complied with, and the fintech can possibly be the front end. Where fintechs also could be tying up with banks is co-lending. So there's a collaboration where part of the loan sits in the bank's book, part of the loan will sit in the NBFC or the fintech, and there can be a collaborative going to market. So I think fintechs will continue to innovate, but the banks, being the more regulated entity, will continue to be relevant and bring governance and ensure the customer requirements are being fulfilled end to end.
Thank you.